Hi, I'm Lou from Dividends Dog. Welcome. So here we look at stocks with an emphasis on dividends paying stocks. So if that's your kind of thing, please like and consider subscribing to the channel. So today we're going to look at a company called VF Corporation. And so while the name VF Corp might not be a household name, many of their brands that they own probably are household names. They have some famous brands that include the North Face, Vans, Timberlands, and others that they sell through the wholesale trade and also as well through their own company-owned retail stores. So it's essentially an apparel conglomerate of all these different brands together. So let's look at the history of this company. The history goes all the way back to 1899 when it was started as the Reading Glove and Mitten Manufacturing Company by John Barbie and a group of investors. By the way, the surname Barbie, keep that in mind. Remember that name. We're going to talk more about that. In 1920, it was renamed Vanity Fair Silk Mills because it expanded into silk lingerie. It later dropped the word silk during World War II. There was an embargo on silk. 1951, Vanity Fair went public. In 1969, it entered the denim market. It bought out H.D. Lee Company and also renamed itself VF Corporation. 1986, it buys the Blue Bell Company that includes brands like Wrangler, JanSport, and Red Cap. 1998, it buys the Bulwark brands, and into 2000, during the 2000s, it buys the North Face and also Vans. Those two brands, businesses become central to the company in later years. Also in the 2000s, it buys brands such as Eastpak, Nautica, Kipling, Napapijri, and Reef. In 2007, it divests its namesake Vanity Fair. It exited the intimate apparel. Also in that year, it buys 7 For All Mankind brands and the Eagle Creek brands. 2008, it buys Splendid and Ella Moss brands. 2011, it buys Timberland and smartwool brands. In 2016, it divests the 7 For All Mankind, Splendid, and Ella Moss. Those together were their what they call their contemporary brands, which they divested. 2017, it buys Williamson Dickie Manufacturing. That includes the Dickies brand, which was big into workwear. Also that year, it divests its sportswear. It divests the Majestic brands, which it owns. 2018, it buys Altra brands and icebreaker brands, and it divests Nautica and Reef brands. 2019, it completed its spin-off of the jeans business into a new publicly traded company called Contour Brands. That had brands such as the Wrangler, Lee, and Rock and Republic brands. 2020, it buys Supreme. That's a leader in streetwear. And in 2021, it divests the occupational workwear brands such as Red Cap, Bulwark, Kodiak, and others. So they've done a lot of buying things, selling things, spinning things off. When we look at the financials of this company, so the earnings per share have basically bounced back in 2021. We look to, the earnings can be a little volatile, up and down. They've had some supply chain issues that have hurt the company during the pandemic. It's causing product delays, issues with their business in China, the manufacturing issues, supply chain as a whole continues to be a concern here with the company. As far as the dividends, they just upped the dividends by 1 cent to 51 cents per share per quarter. That implies an annual rate of $2.04 per share. Note that VF was a dividend champion, raising the dividend every year for 46 to 47 years. It seems this company, it's been removed from the dividend champion list. We see that in the year 2019, they lowered the dividends. This is most likely due to the Contour Brands spinoff. I see that many places still report the company as a dividend aristocrat, such as U.S. News and World Reports, giving them a 49 to 50 years of annual dividend raises. It all really depends on how, the methodology that they use to calculate this out. But either way, the company seems pretty dividend focused. As far as the ratings, Value Line gives them a financial strength of B++ on October 21st of 2022. That's down from a straight single A back in the July report. Morningstar gives it a narrow moat and assigns it as a stable trend and says they believe their fair value is $63 per share. Is the rating agencies Moody's back on October 15th of 2022. It's got a Baa1 for the senior unsecured rating. It changed the outlook to negative. And S&P, the Standard & Poor's, back in June 15th of 2022, it rated it at an A-, their foreign currency long-term rating, but with a negative outlook. So that's where we're at here with all the ratings. If we look at the insiders, we find some interesting things. As far as insider trading, we see the usual options are being exercised and sold. There's a couple of small sales, and in 2022, a couple of the directors are buying stock in the $41 to $64 range. Insider ownership is where it gets more interesting. In the 2022 proxy statement, Todd Barbie owns over 20 million shares. That represents 5.2% of the stock. But then we also see PNC Bank and affiliates, and then they go on to clarify here, this includes shares held in the Barbie Family Trust. So the PNC Bank owns over 38 million shares. That's 9.88% of the shares outstanding. But of the total, 38.6 million of the shares are held in Barbie Family Trust accounts. So the PNC Bank serves as a co-trustee with Clarence Otis Jr. and Juliana Chugg, who are members of the VF Board of Directors. So basically you can say almost all of the shares that PNC holds are basically Barbie family shares. So the Barbie family collectively has a lot of power and influence over VF Corp. Speaking of this Barbie family, in 2020, the Forbes profiled the Barbie family as being one of the richest in America, with a net worth of $7.3 billion. And they noted that the family owns 17% of VF Corporation. So the Barbies' rich family own a lot of the shares. Okay. So let's talk about the pros of this company. The yield is the number one, I would say. At a stock price right now, it's $28.27 per share, paying $2.04 per share. That's yielding 7.2%. For such a dividends, paying company with a history of increasing their dividends, that's pretty remarkable, pretty good. I actually view the Barbie family owning so much as more of a positive. You've got this rich, powerful family, kind of looking over things is usually a positive, even though they don't appear to be taking an active role in running the company. The company has this history of acquiring and growing brands. It's certainly not, it's not timid about disposing of them, either by just outright selling them, or in the case of Contour, just spinning them off into its own company to create value. So they have this history of basically brand building, where they build up these brands and these businesses. The next thing too, this is also a pro, is that there's no big concentration of customers here. It's noted here that their largest customer is only approximately 2% of sales. Their top 5 largest customers, only 10% of revenue, and their top 10 largest customers is 17% of sales. So there's really no big concentration of customers, which is a good thing. I would say there are risks like any other company. There's some cons here. Even though it has a dozen brands, at first look, you say, wow, look at all these different brands, and it is very much a conglomerate within the apparel industry. It really is a bet on these 3 major brands here. There's revenue for 2022 by brands. Vans stands at number 1 at 35%. The North Face is 28%, and Timberland is 15%. Dickies is a distant number 4 at only about 7%. So Vans, their top performer, is not doing great. The last recent quarters, it's been slipping. Management of this company, they're going to need to be able to stabilize Vans back into growth mode here in order to get this ship moving again. But taking this all into account here, I myself own some shares. My average cost is $52.11 per share. And would I buy more? Well, looking this over, I think I actually will buy some more. It's something that's in the $28, $29 range. If I buy some more, it lowers my average cost basis and just collect the dividend stream that VF is throwing off here. It has an attractive PE of only around 11. The yield is above 7%. I think it's a good risk-reward kind of scenario here. We can look to see the stock hasn't done well, especially the last year, but even over the last 5 years, the stock has really done pretty poorly. But this might be a good entry point into a stock that's yielding so much, and if they can hold on to that dividends and keep it stable and growing, I view this as there's always risk and reward. It seems like people are sort of bailing on it. Maybe they're throwing out something that's really could be valuable for the future. I don't know. I'm just my own opinion looking at it. This is not financial advice. It's just my honest opinion. But I would say that's the truth about VF Corporation. So please, leave your comments, opinions, share your thoughts. Thank you very much. Good luck with everything, and have a good day.